Hello and welcome to Budget with Business Standard. I'm Binu Sandhu. Our discussion today will be around stock markets, mutual funds, insurance, and taxation. Let me begin by welcoming our in-house experts. We have with us markets editor Puneet Wadhwa.
Hello.
And personal finance editor Sanjay Kumar Singh.
Hello.
Puneet, Sanjay, welcome to the show.
Thank you.
My first question is to you, Puneet. How do you explain the market rally after the June election day lows, and what can the budget do to extend this bull run?
The rally post the June 4 low was basically on account of stability in the regime. That's what the markets were looking for. The foreign investors who were sitting outside, I mean, they remained fence sitters till the election outcome was known. They, post the outcome, put in about $4.5 billion, which actually saw the indices rally to fresh highs. Sensex, breaching the 80,000 mark. What they are now looking for is, stability in terms of taxation, policy continuity, and the big bang reforms that the Modi government had, envisaged before the elections were announced.
So, is that expected to happen? What are you hearing from your, sources?
The budget will have a lot of make in India push in terms of sectors, to say, which can actually bode well for something like electronics, textiles, apparel, engineering, pharma. What also is on the anvil is a rural push, okay, which could benefit something like agri, auto, tractors, irrigation, fertilizers. There could also be a push for housing, which could, then propel industries, the allied industries from cement, steel, tiles, etc. Obviously, the capex plans is what the budget is also looking. The markets are looking forward to.
Sanjay, coming to you, what are the expectations of mutual fund investors from the upcoming budget?
So there are a lot of expectations, but I thought a couple were very interesting. One is on equity fund of funds. Now, currently, these fund of funds are funds that invest in other mutual funds. So, in case of equity fund of funds, currently they get taxed as debt mutual funds. And why does that happen? They have to basically meet two criteria. The AUM of these funds, 90% of the AUM of these funds must be invested in equity fund, other equity mutual funds. And then in turn, those equity mutual funds must invest 90% of their corpus in direct equities. Now, what happens is that the first criteria gets met, but many equity funds in India may not invest more than 90% in direct equities. Reason being, they get classified as equity funds the moment they have crossed the 65% limit. So the current demand is that change the second criteria, loosen it up from 90% to 65%. So that is one very interesting demand. The other is related to debt mutual funds. Now, as you know, these debt mutual funds lost their indexation benefit in an earlier budget, that was 2023. Now, AMFI has proposed that if debt units of debt mutual funds are held for more than 3 years, then they should be taxed at 10% without indexation. And this would bring them at par with debentures. So these are two major demands on the mutual fund front, which I found very interesting.
Puneet, Sanjay talked about taxation, and you have done a piece that says that there is a possibility that the government might tweak capital gains tax long term and short term. Could you tell us a little bit more about that, and how might that impact the market?
Well, yes, there are expectations that the government may tweak the long-term and the short-term capital gains tax, either the tenure of the holding period and tenure of the holding period of these shares, or the tax rate per se. The long-term capital gains tax is right now at 10%, and the short-term is at 15%. So, if the tax rates were to go up, that can trigger a knee-jerk reaction in the markets. Whereas the tenure may not do as much of a damage to the market sentiment in the short term, at least. Eventually, if the people are making money and they're paying taxes on the returns, I think the markets will eventually come around on that. Another thing is that the F&O taxation is another important avenue for the government to consider in this budget. So there's a possibility that the gains from the capital gains from the F&O segment may be treated as a gain from speculative activity and not from sale of shares. That can actually dent the volumes in the F&O segment, uh, put those traders in more of an investor category, so that speculative activity goes down.
Yeah, this is actually an area of concern that the SEBI chairperson has
Correct.
also flagged.
Yes.
All right. We'll stay with the topic of taxation, Sanjay. And coming to you, what are you hearing in terms of any kind of a shift or any kind of tweaks happening in the tax slab or standard deduction or housing loans? Is there something on that?
Standard deduction, the current amount of standard deduction that one gets is 50,000 rupees. So the expectation is that it may be hiked to 1 lakh. On tax slabs, currently the minimum amount after which your income gets taxed is 2.5 lakh under the old regime and 3 lakh under the new regime. Again, there is an expectation that it should be hiked. On housing loans, currently you get a deduction on your home loan, on the interest paid on home loan. If it is a self-occupied property, then the deduction is 2 lakh. Again, this has been the amount for quite some time. So people are expecting that this amount may again be hiked so as to kind of give a fillip to housing.
So if that happens, if I may add,
Yes, please.
is that if the common man, if the citizens are given more tax breaks, it will give them more money in their hands, which can, from a pure stock market perspective, give a fillip to the discretionary spends and the FMCG sector as well. Another topic of interest probably would be this time around the new versus the old regime, if I can put it this way. Are there chances that the government may do away with the old regime and the new regime is the only regime going forward?
I don't think so. That would be a little too disruptive, in my view, though anything can happen. But what you can expect is some more incentives that push or nudge people towards the new tax regime, because that has clearly been the direction of the government. It does want more and more people to shift from the old to the new tax regime.
So before it, kind of weans people away from the old tax regime and eventually the new tax regime, like Puneet said, remains the only tax regime. Puneet, you spoke about certain sectors of interest, right in the beginning of this discussion. If you were to look at, is there something that we can look at, kind of a rural push as well? Is
Correct.
that something that
Yes,
we can expect?
this is what a lot of people are saying, that rural push is something that may be part and parcel of this budget, which can then, as I said earlier, give a fillip to the agri, auto, and that kind of those sectors. Another area of importance is divestment. Why is because this will put the PSUs back in focus, especially from the from rails to banks to everything. So status quo on taxation, let's say for instance on cigarettes, could put stocks like Godfrey Phillips, ITC back in focus, because their main core business is cigarettes.
Okay.
So a status quo there could see their stocks jump at least on the budget day, sentimentally.
Okay, speculatively, like thinking, if we were to think about, like if we were to look at the recent trends both in markets and personal finance in the past budgets, starting with you, say Sanjay, starting with you, Sanjay, what have been the recent trends in past budgets on personal finance, and will that kind of those trends play out this time around as well?
So as budget day approaches, the common thinking is what will we get from the government this time? But what we have seen in the past 3-4 years is that if the government gives, it also takes away. It has not been a one-way street. So, for instance, you had the EPF earlier. Whatever interest income you earned from EPF was tax-free. But now they have introduced a cap of 2.5 lakh. Contributions beyond that become taxable. Again, on the ULIP front, we see the maturity amount used to be entirely tax-free. And now they have introduced a limit of 2.5 lakh on ULIPs. Beyond that, if your premium income exceeds 2.5 lakh, then it becomes taxable at long-term capital gains tax rate. And again, in the case of traditional plans, earlier entirely tax-free under Section 10(10)(d), but now if your total premium across one or several plans exceeds 5 lakh, then again it becomes taxable. So in that sense, it has not been just the government giving SOPs to people, it has also been reducing benefits, especially in areas that are deemed to be excessive or seen to be benefiting primarily the affluent class.
Okay. Puneet?
From a pure market perspective, this budget will be a slightly different budget from the previous ones. Why? Is because this time around the BJP is not in absolute power. Okay, there's a section of the market that believes that the coalition partners, at least some of them, will try to extract their pound of flesh. Though that is not a consensus view. So if that happens, I mean, populism is what the budget should refrain from. Okay, that's the broad message from the markets to the finance minister. And statistically, if I were to go by, since 2000, on 12 occasions, the markets have given positive returns. So barely a few days now for us to figure out what 2024 holds in store for the markets then, post-budget.
Sanjay, coming to you, the expectations of insurance customers, what are you hearing on that front? Will those expectations be met?
One thing people expect is regarding annuities. Annuities are extremely important products to secure your post-retirement life. They are the only product which, once purchased, will give you an income for life. No other product can match that. And currently, the income from annuities gets taxed at your slab rate. So there is an expectation that there may be some relaxation in this regard. Then on health insurance, currently, if you pay the premium for yourself, your spouse, and your child, you get a tax deduction of up to 25,000. If senior citizens do the same, they get a deduction of 50,000. If children pay the premium for their parents, they can take their tax deduction up to 50 plus 25, 75,000. Now, health insurance costs are galloping. The inflation rate on on medical costs is in the region of 15%. And we see that health insurance premiums also get revised every 1, 2, 3 years. Therefore, the expectation is these deduction limits also get hiked. And the third point I'm hearing is regarding the GST rate applicable to health insurance premiums. Today, when you and I pay your life insurance premium or health insurance premium, the GST rate is 18%, which pushes the cost up. So if we are going to be a society that provides insurance for all, then it would help if the GST rate were to come down.
And Puneet, defense, if we were to look at the defense side of things, the defense sector, what are you hearing on that front?
Yeah, in case the defense budget is hiked, obviously it will give fillip to the defense-related stocks. As in, I already mentioned Make in India. So defense broadly, encompasses that theme as well. Another theme, rather perhaps, is the fiscal deficit on the fiscal deficit front. So if the fiscal deficit targets of the government and the borrowing targets of the government are kept in check, obviously the banking stocks would get a much-needed boost.
Thank you, Puneet. Thank you, Sanjay. Any quick, last words as we part?
Let's wait for the surprises on budget day.
All right, Puneet.
I'll second Sanjay's thought.
All right. Thank you very much. Thank you, Sanjay. And thank you, Puneet. Thank you for watching. We will be back again tomorrow. So please stay tuned.